Welcome to a wild day on Wall Street, ladies and gentlemen. My name is Tyler. Thank you for tuning into the channel. We have a lot of things to talk about: the bond, the dollar, the S&P, AMC, Ortex data for both of these things, like we typically do talk about. But I also want to highlight this article from the street, and the last little paragraph I'm going to read to you guys right now. It says short sellers are playing with fire by paying borrow fees around 20% to continue betting against AMC stock. We will elaborate on this article and what is ultimately being said about AMC in this article. So let's get straight into it, guys. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and let's get straight into it, because first things first, what's controlling the stock market right now? And that's an open question, right? Let me know down below in the comment section what you think is controlling the stock market as of right now. But I will tell you guys, it is a liquidity crisis in the bond market. We've talked about this quite extensively. I sound like I'm beating a dead horse here, but it's very important you guys understand this, that we are held victim and in a stranglehold based off of the bond market. TLT going down. This is the ETF for the 20-year treasury. This going down is showing you interest rates going up, because when bond prices fall, the bond yield goes up. It's like a dividend stock that pays you out, say, 5% a year, right? It's a $100 stock, for a random example, pays you out $5 a year. Well, if that stock drops to $50, it's still paying you out the same dividend, but now you're getting the stock at half the price, so now you're gaining 10% per year. And that's exactly how bonds work. So when this chart goes down, that means interest rates are going up. When this chart is going down, it is virtually impossible to hold a sustained rally. And you guys can even see the last time we bounced in the stock market considerably was July through August, and that's when the bonds started to go up and interest rates started to fall a little bit. And you know, that's not happening right now. There's a liquidity crisis going on in the bond market. Every single day TLT is down. Today was no exception. TLT was down 0.83%. But again, the stock market was able to rally. The S&P up 1.19%, the Dow up 1.34%, and the Nasdaq up 0.86%. So what in the world is going on? The markets are starting to look at the bond market and the liquidity problem that's going on in the bond market as the Fed, the government, someone is going to have to do something to slow this down, or the government could just go bankrupt. So the stock market is starting to see that on the horizon, some kind of pivot from the Fed or from the government in the bond market to slow that down, kind of like what happened over in the UK. That's really starting to happen now. And the first real hint of that, at least from the government, that we're seeing today was Treasury Secretary Janet Yellen is, quote, closely monitoring markets as volatility rises. And Yellen takes steps to enhance the Treasury market, boost funds resilience. Now, she went on to say a lot of things, but this is the main headline, that they are closely monitoring the bond market, because yes, they want bond yields to go up. Yes, 4% possibly is where they want bond yields, but at the trajectory they are going, at the pace that they are falling, they simply cannot let the bond market continue to do this. And that is a potentially bullish thing for the stock market, and that's what the stock market is looking forward to, is this Fed pivot. And that's why, even though TLT continues to go down, you can see these green days in the markets. Now, once you get that pivot that actually comes, that's where you're going to see the real rally in the stock market. And especially if earnings are good here tomorrow in after hours with Microsoft, Google, and then on Thursday with Apple and Amazon, it could be off to the races for the S&P 500, for the Nasdaq, and we could even approach those levels of that 405, 410, 420, 430 range if earnings are good and the bond yields can come back down in a big way. Because if you look at the bond yields right now, it's actually quite amazed that we're not lower in the stock market given what happened, back here in June. This move up in bond yields from about 2.74% to 3.5%, this sharp move, this was the reason why essentially the stock market hit lows in June, and then yields continue to head down to about 2.60%, and it's been straight up since then. So it's actually quite surprising the stock market is holding up this well, given what has happened in the bond market in such a short amount of time. Now, let's talk about the situation with AMC stock. And long story short, this article goes on to say that AMC stock borrow fees raises a yellow flag for short sellers. Current borrow fee rates for AMC stock indicate that demand from short sellers is still very high. Here's what investors need to know. And the key points right here says brokerage firms charge fees to investors who wish to borrow shares to sell short. Borrowing fee rates are determined by supply and demand, plus some other factors. AMC's borrow fee rates are currently high, so short sellers must have extra confidence that the stock will fall for the fees to be worth it. And essentially what this article is saying is that a common range of borrow fee rates is 0.3% to 3% per year. However, when there is high demand for a short sale target, it's not uncommon to see borrow fees exceeding 20%. And really, long story short, like I read in the beginning of this video, and long story short, what this article is really highlighting that I think is important for you guys to fully understand is that when the short interest is this high and the borrow fees are this high for so long, yes, there's a lot of people that are trying to sell AMC stock short. That is true. But when the market dynamics change, when you do see that Fed pivot, when you see the bond yields start to chill out a little bit, you're going to have so many people that are paying 20% cost to borrow rates and start to lose on their short positions, because the broad markets will start to come back to life at that point, that you will see a short squeeze in AMC stock. The question is, do you have enough buying power from the apes still left, enough attention throughout the stock market in AMC to get a full-on short squeeze? Are enough people going to go out and buy options? Are they going to buy stock? What's going to happen in that regard? That's the question here. But as far as shorts forced to cover, when the markets do turn around, when there is a reason for them to turn around with a 20% cost to borrow and a 20% short interest, there's no question there. It will happen. So that's the main point of this article. And I think that's something a lot of people forget, is though you might be down in your positions, and I'm not a fortune teller, you might be down forever, you might make millions of dollars. Not here to tell you guys what to do, how long to hold, really, it's just a time game. But that's the thing. These are numbers. These are facts. These are things we can prove. Cost to borrow at over 20% for the last couple of weeks. That's not a joke. You can literally pull it up right now, which we will do right now. So let's do it. AMC stock. Let's look at the numbers for the day. It does look like AMC stock was slightly negative to close the day overall, down about 2.39%, including this move down that we are seeing currently in after hours. Not a huge deal relative to the moves that AMC stock can make. It's quite a docile day. I think all of us would agree with that. Now, cost to borrow rates, 22.49% cost to borrow max. Very high, very, very high. Cost of our average of 20.21%. Cost of our minimum at 7.13%. These are super high, crazy, stupid numbers given where we are currently at with this whole Fed pivot potentially turning the markets very bullish. It's literally playing with fire for the short sellers. So that's what I'm doing. I'm in this for the long haul. I'm in this for the time, baby. Until it happens, I'm not selling. And that's it. I think there will be another short squeeze, and people can give up all they want. AMC's not my only position, and I don't think it should be your only position. But I do think all the due diligence that we have done is not wrong, and I do think it will come to fruition. Maybe people were wrong on the timing, but I do think it will come to fruition. Now, as far as right now, the live short interest of free float is sitting at 18.36%, and the option activity for the day is looking like about 22% positive order value, so it's not looking all too positive as of right now. Again, though, there was not that many options actually placed on AMC. 6 orders totaling $135.44 thousand for the day. So the options market for AMC stock is not very liquid as of right now. There's not a lot of people that are trading options on AMC. Now, let's go ahead and look at any economic data that might come out tomorrow that could move the markets. I don't believe there is any, but let's go ahead and refresh our memories. We do have the housing price index month over month for August. That does come out at 9 a.m. in the morning, as well as the S&P Case-Shiller home price index year over year and month over month as well. You have the Australian interest rate, a 2-year bond auction, which I think out of everything, that 2-year bond auction is going to be most important, because the 2-year bonds are affected the most when the Fed raises rates. It's called the yield curve. So the 2-year is on the shorter end of the yield curve, right? You got 5, 10, 20, 30-year bonds and intermittent bonds as well. The 2-year bonds are the most important. Those are going to be your short-term lending rates, and that is the thing that is affected most by the Fed. So if you get good demand with this bond auction tomorrow, those bond auctions can send the markets flying pretty good amount, especially right now as bonds have fallen so much. But if there's not good demand for bonds, well, look out below. At the same time, you will have, like I said, some earnings tomorrow morning. Coca-Cola, GM, UPS, 3M, GE, Halliburton. Those are going to be the bigger ones that report earnings tomorrow morning. JetBlue as well. I think they might affect their own separate industries, right? But I don't really see a market-wide effect from that. Now, Microsoft, Google, those are going to be the big dogs that will definitely move things around quite a bit. Now, the last thing that I want to do for you guys is point this out. And I think this is very interesting. We're going to make a whole video on the technical analysis on the S&P 500, as well as AMC, as well as the TQQQ and the NASDAQ in another video. But the biggest thing I want to point out here in this video is a trade that I am in and what actually happened today. So if you do pull up, I'm going to have to take AMC off here and pull up TQQQ, because this is the trade that I am in. This is basically the NASDAQ bullish ETF on steroids. So when the NASDAQ does well, this thing does really, really well. When the NASDAQ does not do well, this thing does not do well at all, right? And you guys can see that today was not really a huge day. I mean, it was up 3.40%, which is good, but it wasn't that big in the grand scope of things. Now, what happened in the options market is very, very interesting. So my specific trade on this, I have now about $3,000 in this trade. I initially put about 1,800 in, so I'm up about 65% total, about $1,400 on this trade. But what happened today on the $25 strikes, that's the one that I own, is that you hit a low of $60 on these options, and then it hit a high of $106. So what it looks like to me is that the market makers are actually expecting that the NASDAQ could move by a very big degree over the next couple of days, call it by the end of this week, because they really juiced these call options up today, even though the TQQQ only went up 3.4%, which is not even that big of a move for the TQQQ. So what it looks like to me, market makers are expecting the markets to move big in one direction or the other, so they are going to charge more for that premium. And what you can see with the S&P 500 more specifically and the option activity for the day, hedge funds are betting the same thing. You see a 86% positive order value, 6,300 orders totaling $807 million for the day. The option activity is turning very, very bullish over the last couple of days, over the last really week with the S&P 500, and you're starting to see more of that bullish positioning, which again is a positive thing if you are someone looking for the stock market to go up. So that is going to be all for this video, guys. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching. I will see you in the next one.